To today's edition of Toggle's Daily Video Insights. My name is Jan. I'm one of the co-founders of Toggle, and for those of you joining us for the first time, we take a deeper dive into one of the many insights that are generated daily across hundreds of US stocks by Toggle Copilot, a system you're able to try on your own by just going to toggle.global and you can test drive it. In the meantime, if you'd like to see more of these insights, please sign up to our YouTube channel, and we do them every market trading day. Today, the focus is going to be on Heartland Financial. As you can see here, there haven't really been any particular price pressures that Toggle was able to uncover until quite recently, where it is pointed out that actually Analyst Revisions could be a pretty meaningful driver of the upside price potential, at a very least to kind of recover some of the highs from the recent weeks. But taking a look in more detail at the insight itself, we'll see more precisely what this implies. This is a pattern that actually could be quite short term, although it says horizon is 3 months. As you can see, the analysis of past 16 occasions where you've had these kinds of improving analyst revisions suggests that actually it could be much shorter than that. In fact, it could be a matter of weeks. Starting at 48.77, the price potential goes all the way up to 51.80. And of course, as always, the red line here suggests a reevaluation of the thesis if the price were to drop outside of the confidence interval and below the red line at 47.25. Taking a look specifically on what's actually driving this, you see that this is actually quite a compelling pattern. It goes back all the way to early 2000s, and it shows that when we've really seen these positive revisions of EPS across for the outlook of Heartland Financial, just eyeballing the chart, you can see that there have been quite substantial rallies. Not always, but most of the time, the risk reward looks very compelling. In fact, looking at the past performance, we can see exactly this trade-off. And so here you're seeing a lot of the upside. However, very importantly, the downside is also quite substantial. So this is a much more what you would call a barbelled distribution of returns, meaning that whilst the downside is compelling and definitely very likely, the downside can be meaningful, which again emphasizes that it's very good to keep an eye and monitor the performance of the stock price. And if it deviates substantially from the drivers highlighted, then that's the time to potentially remove it from your portfolio. So much for Heartland Financial today in the daily brief, which by now should be in your mailboxes already if you subscribe. If you don't, just go to toggle.global and you can, and you'll receive a daily dose of very relevant market content, as well as also a video with a new idea every day. We also discuss what's next for Bitcoin after the Tesla announcement, and of course the uproar that has caused in the crypto community. So thank you for your attention, and we'll see you again on Monday.